Good morning, everyone. Before I sort of start discussing on the topic that I prepared, I want to say hello to Mr. Sriram Srinivasan sitting there, right there. Hi, SS, as we call him. He is very quietly sitting there. He's a legend of our industry. Round of applause for SS. I went to him earlier and I said, shall I call you on stage? He said, no, don't embarrass me. But I'm still embarrassing you a little bit, SS. Please bear with me. Most of you would know SS as the CEO who built Madura Garment. We were all part of the same company, learned a lot from him. He's our boss emeritus. Recently, I was talking to him about something on flying machine, and he was giving me guidance that why our advertisement has become so serious and we take our brands so seriously. Where is the fun in our advertising? And why don't we create something which is more, poking fun of ourselves, taking ourselves less seriously, have fun. So we continue to learn from SS, and I was pleasantly surprised to see him here, and I went to him, said hello. Good afternoon to you, SS. Whenever I think of businesses that have created value, and that's the theme of this IFF, I try to, think of the time when I heard of that business for the first time. And I'm going to take a lot of brand names with a lot of respect from the industry. So let's think of Jockey as the underwear brand. And I was recalling when I when I heard of Jockey for the first time. Then I remember that one trade partner telling me that Jockey is exceptionally good at replenishing size-wise, style code-wise stock at the point of sale. And just imagine in a category like underwear where you're selling into tens of thousands of point of sale across a country like India. And if somebody does that job well and competitively well, others struggle to do that same way, that creates a lot of moat and it fends off the competition. Jockey kind of brand that have created a lot of value. I also think they've remained very, very focused to the category of innerwear and related categories like activewear and loungewear, kids wear for, innerwear for kids or for women. So while a lot of other brands other businesses have tried to, get into too many categories, I really respect Jockey for being very focused. They haven't yet launched the wedding underwear because wedding is such a big thing that everybody wants to be in the wedding, occasion, because somebody like Manyavar may have created a lot of value. So, likewise, if I think of Manyavar, when did I think heard first time of Manyavar? Somebody in the industry told me, it was from a financial industry friend, he said, Manyavar delivers an EBITDA of more than 30%. And I said, that's really a number that sort of really top of the industry. And then I met Ravi of Manyavar at his office in Calcutta many years back. And in the discussion, he just kept saying, your industry discounts too much, your industry discounts too much. And I could sense his dislike for discounting. And he had these elaborate processes where he said, we send goods to designated list of store, let's say 40 store. And based on how the sell-through of that style, new style, in those stores, then they decide to take it national. And they've created their own homegrown algo and work on that to reduce discounting. That was really impressive, and I felt that this company has something different thinking than how the industry thinks. And recently I came across one more thing about Manyavar, that they build a capability on inter-stores transfer. In our business, in physical world, sizes get cut, and we try to consolidate into full price stock, into full assortment, and then sell at full price. And they had I'm told, a team of 30, 40 people that sort of does this job manually probably, but they have a method that works, and they've created a method where further reduces the discounting because of the cut sizes. So that's again a capability that Manyavar has built. Coming to other brands like Titan, Suparna is similar batch, college, she's here, and I don't want to talk too much, but I really respect what Titan is doing. And in my earlier college days, I used to see the advertisement, which was breathtaking. And as a MBA student of marketing, I used to always look up to the Titan TV adverts and music of the Mozart. And they had like really very breathtaking advertising, and then they went into the distribution, and I'm sure Suparna and team is here, you should talk to them, how they build. Biju is here with his own experience, distribution to nook and corner of the country, and I'm told they have market share which is more than 2/3 of the watch market share in India. That's like really a big sort of difficult to replicate thing. Similar, Tanishq, and I have Arun here, and Ajay, CEO, is a good friend of mine. They've created a business with a lot of modes and based on trust. And I remember first time I heard of Tanishq was on the carat meter, and they did something to get the purity of the gold and build further trust beyond Tata brand name. So all these companies, the example I'm taking, are doing something with capability. They have some unique capabilities they've built that creates moat for them, and it's very difficult for competition to copy that, and they create very high market share. Another company I really respect is DMart, not directly in fashion, but it's in retail. And first time I heard of DMart when Mr. Radhakrishna Damani, very well-known investor, was building this business where they were buying out the store. They first used to buy the real estate of that store, and also they used to pay in advance to the vendors, I was told, and they got very large cost advantages, and they were selling to very price conscious in Bombay, let's say Guju, a housewife, very, very price conscious, middle class consumer segment, and they were making money out of selling it, the DMart, groceries, etc., a very sharp price. And they had a model, and I see that they're also doing something which is building capability. So my word that I keep talking will be about capability. So all the companies that have created large value have built capabilities that sort of sustain in good and bad times. And paying on time is one common factor among a lot of these companies, that you see a company which pays to its vendor on time, there's a high correlation with that business doing really well. And I heard of Keval Kiran, another listed company in our business, where Mr. Jain, I'm told, they always make payment to the vendors on time. It shows a certain cash flow culture where they respect the partners and they build the business with the partners. And similarly, let's talk about Nykaa. They have built a lot of unique capabilities on the marketing to Indian women consumers on their beauty products. Again, a capability that is something unique, and they are building on that capability. Fab India is another good story that has created large value for its shareholders. When did I hear of Fab India for the first time? I heard about the way they were building their merchandise through working with karigars and weavers across the country. Then on the front end, I saw their beautiful store in N Block Market in GK in Delhi. And when I went there as a consumer, as a whole building ahead of time there, very few brands had that size of the store. And when you went inside that N Block store, and it kept expanding, they kept buying the neighboring stores. It was a very unique experience, and you felt good, buying the kurta, the ethnic, the weaves, and the work they had done with Karigar. And they opened one store in Koramangala in Bangalore. I remember I used to go there as a customer, and often I used to go just to have something to eat. So they had a small little cafe there, and they had a sense of the taste of the Indian consumers, and I used to go, and often not to buy the apparel, but actually just to have a coffee at their Koramangala store. So I can give you an example of, companies that have created large value in this industry. And that's come back to one word that I want to use, is about capability. So most of us, the word that stays in our mind is, what are the capabilities you are building? And for each of the brand, it will be a different capability, and but it will create a moat, something that will fend off competition. I can talk about my own experience of Tommy Hilfiger. I've been working on that business among many other brand that I work on for last 16 years. A lot of time industry people ask me that how come there's a consistency in Tommy Hilfiger across 70 cities in India, where the assortment, for example, let's talk about the product, that assortment is very relevant and it's always adequate. So you won't find many times Tommy Hilfiger stores which are empty or without adequate stock level across the width and depth of the country. Another capability that people talk to me about is how you are able to offer a very consistent staff of a certain quality and training across the country, that Rohit Singh, our CEO, was talking about earlier in the day, that there's some capability this business has built where they're able to consistently give a very high quality consumer service at the front end and also on the product assortment, relevance of the assortment and the quantity of that assortment. We are able to offer something which is consistently across 70 cities, and hence it's strong market share in that super premium segment. So capability is the focus of my discussion, and in this presentation I'm just talking about how capabilities are important. So my message is that businesses gain competitive advantage when they execute with high quality, with consistency, and through wholehearted efforts made in building unique capabilities. And this becomes, like I keep saying, moat against the competition. When I look at my 30 years of experience in fashion retail segment, I see industry focusing too much on the growth opportunity. Everybody talks about growth, I've doubled my business, fastest growing, and everybody is talking about very macro level data. They'll say there is a move from unorganized to organized. Also, they talk about, okay, there's a certain dollar per capita income of India, after which the inflection point will happen and the consumption will thrive. I remember my early days in 2000 when we were trying to bring in foreign brands to India. The Pandit used to say once India reaches $1,000 per capita income, the consumption will take off. Frankly, nothing happened when India crossed 1,000 at the value segment. At the mid segment, yes, there was a tailwind coming from unorganized to organized, and businesses were really gaining international scale. But if I look at premium segment, the brands today, all of our brands are in that 1,000 to 2,000 crore business, which is the size of big brand. But the inflection point was not happening really. I mean, now today people are talking about a $2,000 inflection that gets increased to $2,500 inflection point. But still, at a premium level, our markets are still small compared to the international standard. At value segment, yes, there is a huge scale built by a lot of good companies, and there the international scale has already happened. But if you go slightly into the middle or upper middle price points or premium price point, the Indian market is still very small. And I'm sure the Pandits will start saying that at $5,000 now the inflection will happen. But I've been seeing it from $1,000 to now $2,500. India is growing really well. There is a momentum, but it is a very price sensitive, unorganized to organized, and only few companies who have built good capabilities, unique capabilities are actually creating value. So, I want to just go back to the simple principle that we used to learn. Industry focusing unnecessarily on growth opportunities. And I said, let's look at basic, like a G matrix, what we studied. On one axis is the, y-axis is the market attractiveness. That's your growth, your scale, size. The other is your competitive advantages. Well, whole industry is frankly talking only about the y-axis. It's only talking about growth. It's only talking about scale. It's talking about how big. Nobody's talking about making money. Not very people are talking about really generating cash from the business and talking about financial matrices. And they happen when you have some unique core competencies, which is the x-axis. So my whole point of argument in this forum, when Amitabh and Anjali and the team came to me and said, what should be the topic of this IFF? I said, we speak too much about growth. Anyway, that discussion will happen, and there's nothing wrong. Growth is important, scale is important. I'm not trying to say that's not important. Of course, that is important, but that is not that's a necessary condition. It's not a sufficient condition. The competitive advantage, the capabilities, and then the profit that you makes it a sufficient condition to make money and keep everybody, all the stakeholders happy. So my message in this IFF, through all the case studies that we are working on, is let's discuss how these capabilities are being built by different companies and what are the learnings for all of us, so that we can talk about a holistic view of the business, including a lot of focus on unlocking the value. And that's very important, that we have to shift the mindset from growth and scale, important. But now what else? So what else is capability? What else is competitive advantage? What else is profitability, and et cetera, et cetera. Now, as the competition increases, these capabilities will be very, very important. Now, you look at one end, you have competition coming from foreign brands. You had Uniqlo, and suddenly in the last winter season, everybody said Uniqlo is now taking some market share at certain price point. And they have unique capabilities on winter wear, heat tech technology. They do a lot of yarn innovation, and they're bringing that to India. On one side, foreign brands are coming. On the other side, we have competition coming from startups. So startups are now eating into market share of big companies. So let's take example of Meesho from this. Now, when I speak to a lot of people, Meesho has just sort of disrupted this ethnic wear, what we call A-line kurti in women. And they sell probably at 499 rupee MRP A-line kurti. Now, everybody else is now losing market share because at that sharp price point, Meesho is taking away share from a lot of other offline and online players. So you have competition going up for foreign brands and from new startups, new companies. And if you don't have capabilities which are sustainable, then those companies will fold up. Because if you just focus on top line, the business may not sustain. And a lot of companies have failed in India, in our industry, because the focus has been only on top line and only on scale. Again, I repeat, growth is important, scale is very, very important. But again, it is not a sufficient, it's a necessary condition. You need many more things to make profit in this business. Now, I want to take you through some strategies, how some companies are building financial returns for their shareholders through capability building. So I was talking to a top-notch consulting company. It's a global consulting. They said, we review the companies through what is known as total shareholder rewards. Now I said, what is this total shareholder reward? They said, you look at a company, it has a certain worth. If it's a listed company, you know the market price and the market is always right. So you have a certain market cap. Plus you are paying a dividend every year. So the shareholder is getting value of the share. Plus it's getting a certain crores of dividend every year. So that's, if you look at beginning of the year and the end of the year, the difference between the two, market cap plus dividend, is actually the shareholder return that you have generated in that 1 year. And if you track that consistently, that becomes the total shareholder reward. If a company is not listed, there are still well-developed financial matrices on market cap linked to sales, so many times sales, or so many times EBITDA. My favorite is on cash flow, that you look at the real, cash flow is a real KPI of a company, that you're throwing a certain cash. Are you paying dividend? Now, when you look at the cash flow and you look at that as a 2.5% yield on the business market cap, then if you look at whatever the cash flow of that company, if that is 2.5% of the market cap, so you look at cash flow and multiply by maybe 50 or so, that gives you a sense on what is the valuation of the company. So those are, their method through sales, through EBITDA. And then you look at every year, what was in the beginning of the year and the end of the year, what is the total shareholder reward. And this consulting company did a study of a lot of consumer companies in India over a long period of time. And they realized that the TSR depends on 3 factors. One factor is the scale and growth of the business. So 50% of the improvement in the, 50% of the shareholder reward came from scale and size, because the companies are looking at what is the scale, what is your momentum, it shows your consumer acceptance, it shows that you're getting some capabilities that consumers like. So 50% of the TSR is generated through the scale and the growth, and hence they are important. But the balance 50% is coming from a margin profile, so how your gross margins are improving, what is your gross margin level, what is your EBITDA percentage, what is the EBITDA scale, etc. And then the third and most important thing, which we rarely talk about in our industry, is the capital efficiency. What is your return on capital employed? What are your stock turns? What are your working capital turns? How many times are you generating 4 times stock in a year, or less or more? So they are very established industry practices. And these are all boring financial things. We would rather talk about fashion and have a fashion show. But I think if you really want to generate, if this industry to thrive, the profits cannot be ignored. We can't just talk about growth and scale. We need to talk about how your margins are and how your capital efficiency is. And stock market, people always value capital allocation. Are you putting the money behind the right attributes where you get return, or you are just wasting time in building inventory which you will have to discount going forward. So that consulting company has done a large study, and they've created this theory of TSR, and they realized that these 3 things have to be looked at, and that's what this IFF's focus has been. How do we decode the value from our businesses, not just talk about top line and growth and scale, but look at holistic picture of the business, all from margin point of view, and most importantly from a capital efficiency point of view. And simple methodology which I learned, whenever you do a new business, a new category or a new brand or anything new, we look at three simple things. First thing we look at is, what is the consumer side? So what problem are you solving? Why should consumer buy you over somebody else? So basic consumer definition, okay, I'm getting into this business because I see a gap here. I'll do a better job of servicing this demand of the consumer than what the industry is doing or the current players are doing. And that becomes an important part, that look at the consumer side. Is the market attractive enough? Now, for a small entrepreneur, something will be attractive, but for a big group, that may be too small, right? So for each kind of shareholders will have different attractiveness of the market. Then you have to figure out what is attractive for your own set of ambitions. Second point we'll always look at is how easy to execute that promise. So you are telling somebody, okay, I will deliver something in a certain time. Let's say today hyper-local delivery is in fashion. They're saying we'll deliver to you in so many hours. Now that's a problem you're solving for the consumer, but how will you execute that promise? That how will be your feet on the ground? How will you pick up the goods? And how will you deliver hyper-local to the consumer? Is it easy? Is it sustainable? Sometimes what happens is, in the trial phase, you are able to service something. But when you have to do it at scale and across the country, it becomes very difficult. So look at, if the execution is simple, easy to do, sustainable, then those are the things which create value. And the last point is obviously profitability. Don't lose sight of it. If I have that consumer promise and I know how to execute that promise, am I going to get money? Will I make money for a shareholder? Will I get adequate ROCE from doing that? That's important. And this whole, IFF is about case studies. So we are now talking in next 2 days, today included, to a lot of big companies, that have created wealth. We respect them a lot. And a lot of people, senior management from those companies are here. Now, any business, why you want to get into the business, what is that business, we understand, because the motivation is quite clear. But the most difficult thing is how to create. If Jockey has created a size-wise replenishment across tens and thousands of points of sale in India, can you do this? How did they do it? And that's a very difficult thing to understand and then to replicate. So this IFF is all about your ability, your access to those people so that you can understand and decode how they did it. And how can you do that? What are the learnings? And that's why this forum is very, very important. And the theme of decoding the value creation is that there are case studies here being presented. Ask them the question during the panel, or they all are available here for long hours. My friend Abhishek is from Puma is here. Ask him how he created the Puma brand, and can you learn something from that? And sort of he's here. Access him. If there are other good companies here, Titan, Tanishq, a lot of good companies, people are sitting here. We respect them in the industry. And it's our golden opportunity to connect with them. And that's what this IFF is about, decoding value creation. So if I summarize, besides top line and scale, there are other aspects which make the business very good, sufficient, which is about profitability, about margin. And there are some TSR formality, methodology. And also look at a business in simple terms. What consumer promise I am fulfilling? Can I execute it consistently? Will I make money by doing that? And there are a lot of good case studies here. Let's link up with people here and learn from them how they did it and what are the learnings for all of us on how to do that. That's it. Thank you. We'll be happy to connect with you. Sorry? Yeah. Sure.
Thanks, Shailesh. And to continue the conversation, I'm going to ask a few more people to join you up on stage. Amisha Jain, MD and SVP at Levi Strauss. Dilip Kapoor, President, High Design. Nirupa Shankar, Joint MD, Brigade Enterprises. And Vineet Gautam, CEO, South Asia, Bestseller.
Please. Hi, Nirupa, how are you? Please. We have a very esteemed panel here, and we want to continue with our theme of decoding value creation in the industry beyond top line growth. So we have a very interesting panel, and let's start formally. Let's introduce ourselves quickly, and starting with Vineet Gautam from Bestsellers here.
Hi, I'm Vineet Gautam. I head the Bestseller India business. We have about 10 brands, obviously. Few of them are very, very known. Jack and Jones were our only selected arm. We've also ventured into a few value brands, and then we bought up a Indian wear brand last year, believing in the ethnic market that is very large. It's called Indie Fusion. And so about 10 odd brands in the country, and I've been with Bestseller for about 13 and a half years now.
Hi everyone, my name is Nirupa Shankar. I'm the Joint MD at Brigade Enterprises. We're a real estate developer. We have 3 malls under the brand of Orion. So all 3 are based in Bangalore. But as a developer, we also have a lot of standalone retail and shopping arcades that we develop. Thank you.
Dilip Kapoor, High Design, only one brand, and have been at it for a long time.
Hi, I'm Amisha Jain. I head South Asia, Middle East, Africa, and non-Europe for Levi's Strauss & Co. I've been with Levi's for almost closing into a year now. Prior to that, I've been part of the retail industry.
Let's start with India. So with our 4 panelists, let's check what their view on India's story. What do they think of India market going forward? What do you think will be the headwinds and the tailwinds, the opportunity and the threats? Let's start with Dilip, and then we can have a free-flowing discussion about the India story and opportunities.
Okay, I think the bounce back is pretty incredible. I think the growth, even if I average it out for 3 years, was better than it would have been if we'd not had COVID, which is really the shock. Going forward, we don't know. We're seeing very, very interesting and important changes that might have influenced the growth in our direction, and I think that's the skewing of the income, of the incomes within the country. Our average selling price growth has been way beyond inflation. Clearly, the rich got richer. I don't know where our middle end is going, but we're pretty much going in the direction of going more premium, possibly more bridge to luxury.
Anybody else wants to continue?
Sure. I can speak from a mall developer's perspective. If you look at the kind of trends that we're seeing post-COVID, finally, in this last quarter, the kind of footfalls that we saw in the malls were greater than what was there pre-COVID. The sales consumption was significantly higher. Even the rentals that we're able to charge, even the rentals grew by 30% on average. So that means some people took up new space. Sorry, I'm just informing the retailers out here.
You're not going to be very popular in Rupa.
But it's a good sign. It's a healthy sign that even categories like family entertainment and F&B that were finding it hard to sort of see the bounce back are doing extremely well. They're seeing numbers that was not previously seen in COVID. So at least from the mall developer side, we're able to say that, hey, there's a lot of positivity, whether it's in fast fashion, apparel, athleisure, cinemas. Every category is doing very well. And that positivity is shown with the rentals, but just...
Nirupa, tell us one category that's really hitting outside the park. Which is one category that's really doing well?
So consistently through COVID, one category that did well was electronics and phones, televisions. Electronics just did consistently well. But I guess the biggest bounce back that we've seen is in food and beverage. You have the same offering, you had the same venue, you had the same ambience, but somehow now the bounce back to F&B is so strong that the kind of growth plans that we are seeing with F&B operators is quite tremendous. Of course, athleisure again did well throughout COVID. And of course, fast fashion continues to do well.
Nirupa, be honest, which is the dirt category? don't be diplomatic. Tell us which is the category that's not doing well at all.
One category that I found a little disappointing was the online jewelry category. Keep it short.
So I guess Just adding on to that, you know, the India growth story, people keep talking about it. And I think we all have to kind of accept that, look, India growth story is real. As long as you are long on the market, and our global CFO kind of spoke about it recently, you know, I think India is a great market for anybody who wants to be in the market for a long term, right? I mean, if you're looking for value creation tomorrow, then obviously there's going to be these fluctuations. I feel the consumers pretty savvy. I feel, you know, growing middle class, strong, robust economy. Obviously, you know, from a fashion, etc. point of view, this is a pretty solid market for anybody. If I look at all our markets, you know, that I work with, India is continues to be running extremely strong. I think the one beauty of our market, and I think there's this whole perception that Indian consumer is price conscious, and hence we don't know where retail, fashion, etc. will go. And I feel the one thing that I've come to realize that Indian consumer is not price conscious, they are performance conscious. You know, and that's a very important one, because for every brand, there is a market, right? As long as you're giving them the value for it, right? And hence, this becomes all about, again, to your point on value creation, I think becomes about value creation for the consumer. So I think long story short, I feel India is a pretty strong market, will continue to be, as long as you're in this for the long haul, right? And it's not about turning this tomorrow or getting a certain valuation tomorrow.
Misha, Levi's as a jeans brand is getting competition from other categories like athleisure, track pant, or shorts on one side, and then you have the revival of back to office formal pants and more tailored products. So how are you looking at this competition, and how are you fighting for your jeans category compared to an athleisure one side and a formal trouser on the other side?
That's a very interesting question, actually. I think I'll kind of take a step back, right? I think as a company, right, which is 170 years old, I think we're sitting on a very strong legacy. We're sitting on a value system, and our values-based approach, I think, is what I would say is the fundamental and foundation to everything we do. And the reason I kind of go back there is because, as you asked, that what are we doing about competition, right? I think fundamentally what is important is that when we look at us and what we are here for and what we are here to cater, we are very clear that we are the largest apparel brand which has, in terms of catering to the denim consumer, right? I mean, we are the largest jeans wear brand worldwide. Now, there are a couple of things that are sort of driving this. One is a values-based approach, the way we go about doing business. And I think the 170 years, that legacy that we have, we've kind of very clear on how we go about doing business, in terms of just the way the workplace comes about, in terms of, the passion that our employees bring to the workplace, in terms of the diversity we drive. And I feel that's a very important mode/capability per se, which I feel allows us to kind of take on anything that comes. Now, going back to your question on how are we, with these changing times, how are we changing? I think the one big trend that we've seen, Shailesh, is that there's a massive casualization trend, which works in our favor, right? I mean, that is, again, underscoring an area that we have the right to play, and we have a purpose there as well. So I think for us, right now, denims is running stronger than ever. We have innovated in the space, which is very important to us, right? So when it comes to denims, whether it is cottonized hemp or whether it is talking about tencel or talking about waterless technology, I think bringing all of that to make this sustainable and ensuring that we're giving the value to the consumer is one thing we're driving. Having said that, we look at consumer trends very closely. So we've launched our own athleisure range. We have our Gold Tab, which is our answer to athleisure. We are bringing that to the market with the strength of and authenticity of Levi's, right? At the same time, we have this beautiful collaboration with Deepika, right? The Levi's cross Deepika Padukone, if you look at it. And we have the looser, baggier fits that we bring in that. And that's, again, kind of, sort of answering to that trend. Consumers are wanting more comfort. They're choosing more consciously. They're wanting comfort. And I think that range is kind of catering to that as well. So I think it's kind of both, I would say. One is kind of sticking to our legacy, ensuring that we approach business through our whole profits through principles approach that we have, but at the same time being very close to the trends, ensuring that, we are catering to the market and being on trend in the market is what we're after.
Vineet, over to you.
Thanks. I think two parts to this. One for tailwinds. I think India as a general country, the moment, I think, let's look at longer future because retail business is a long-term business, not a very short-term. We're going to become a $10 trillion economy someday. I don't know when that is, but it's going to happen. But I think that is a large opportunity that we are all looking at. But it's not going to happen from India, it's going to happen from Bharat. And I think that is something which a lot of us are not able to relate quickly. The larger consumption story, while currently looks at the top 30, but I think the next 100 cities odd is going to emerge very, very quickly. And I think and that is going to drive a lot of consumption. We already see throughputs in tier 2 towns, which are quite encouraging. We just opened 2 stores, one in Jaipur and one in Ahmedabad. The kind of response that we've seen is fabulous. The other part is, I think India from a saving economy, generally we used to save a lot. I think as India is becoming younger, we're trying to spend a lot. And I think that is the next big lever that will happen and that will have a lot more consumption, and I think that's what is important for all of us. I think what I'm realizing over time is that people are not building brands. I think people are building labels, and I think that is the biggest challenge of why people are not making money. You said that, SHAILESH, and I think that is, while this D2C, everything is good, but making labels is not important. Making brands is important because that's going to stay for the next 20 years for you. I think that's something which we all need to figure out. We run a very large business in India, and 60% of our business, very few of them, comes from women's wear, right? And I think that's another focus category which a lot of people are not focusing. That women's is not as small. It is becoming one of the largest category in terms of Western wear. I'm not even talking ethnic yet, because that anyways we all know is a very large one. I think that from a headwind perspective, 2 parts. I think quality of real estate in smaller towns or in Bharat is a very large challenge. You have to end up going to a high street, which actually is not a high street. We just don't have high streets in this country. So I think that is one part. I think we have a developer here. Maybe they would like to get into that. The other is manpower. I think that is the next biggest headwind that we have. People just don't want to join retail. It is no more as glamorous as it used to be. And I think as an industry, we need to come together to figure out how will we manage this challenge. Because end of the day, retail needs to be manned. And I think if that is not happening, it's going to be very, very challenging. And that could be an impact on everything, growth, profitability, whatever you say that.
Moving to next discussion point with the panel. See, we have this IFF theme of decoding, value creation. We're talking about growth versus capability building, profitability. So on that theme, what are your views? And related to that, what are the 2-3 capabilities your organization is focusing on right now, that will help you sort of take your organization forward? Nirupa, you want to start on the theme of this IFF and what are you doing to build capability? What are the 2-3 capabilities you are building?
Yeah. Thanks, SHAILESH. So again, I'll talk from a mall developer's perspective because that's the one I can talk about. See, of course, when you look at the retail space and the retail infrastructure in the country, it's definitely not anywhere close to what we see in the more mature markets of, say, even a Vietnam or a Singapore or a US or a Japan or a Korea, anything like that. The retail space per capita is very low in India. It's just 0.8 for the top 3 cities. So there is definitely a lot of opportunity to grow in terms of creating nice retail spaces. Of course, as a mall, you're always looking to see which is the next mall that's coming up next to you and how do you stay ahead of the game. 2-3 things that always we try to focus on is, one is, of course, the retail mix. Like what is the offering that you have to give to your catchment? And the second, which is a little harder to do, is the vibe, right? It's the X factor. It's not just the product or the location or the pricing or the positioning of your mall. It's like, what is that X factor that you can bring? When you walk into a mall, do you get a positive vibe? Do you not get a positive vibe? How is the planning done? How is the activities and entertainment done? Is it loud and jarring, or does it, is it conducive to shop? In the end, we want people to come in, have a good shopping experience and spend more. So these are all the finer aspects. So I think for us, it's definitely the experiential aspect of it. And the other thing that we've noticed is that when you create, so the thing is, competition is not always bad. It keeps you on your toes. And when you have, when you are part of a larger complex, like a mixed-use development where there's office, there's retail, there's hotels, there's residential people. It all acts very synergistically. So creating mixed-use developments is definitely a USP to the mall as well, because it creates a lot of synergy. So for us, two things. One is, how do you create synergy so that your mall actually performs better? And the second is the vibe and the experience of the space, which is harder to quantify, but that is the main USP of a retail space.
Dilip, over to you on the theme of IFF and what are the capabilities that you are building in your organization.
I think, Vineet, you said something that we see as becoming very critical and suddenly seeing it as an advantage. We always saw the idea of trying to create an original brand and identity as a disadvantage. And it was, in many ways, it is a disadvantage, having to build capabilities for design, for example. Why not just take the latest trends? Why the hell do you have to keep trying to be original? I think building the capabilities that are critical for a brand are critical for your profitability. I think there's one key thing that we've realized, that however hard it is, however more effort it takes, it ends up in the end giving you far greater profitability, because you are able to, essentially get a better price for the product. I think that's one key thing that we've realized, and we work extremely hard at it. The second thing is, I think you said something about Bharat. Again, an interesting thing. We keep, possibly we don't know it well enough. We are clearly tier one, but I come back to saying that we're seeing much higher growth in average selling price than in inflation or the overall market. What does that mean? When we say Bharat is, tier C is growing faster, tier D is growing faster. Well, I don't know, not in my business. In my business, the fastest growth I'm seeing is my Atelier range, which is my luxury range. I'm seeing by far the highest growth. So do we need to actually look at the different tiers and see what the actual growth in each tier is? And possibly even categorize it further down. Maybe accessories is a different business, I don't know. Maybe handbags is just a weird business. But I see the Bharat out there, I see it tempting me, but it's not where my growth is coming from, I don't know.
In fact, I'll share one insight. So what Dilip is saying, that Bharat is still unknown to a lot of us, and we need to figure out how we master that, right? So I have a theory that, when you move from unknown to managing and making it known, you create a lot of value. So when in 2003, I was given charge to bring foreign brands to India and then launch Esprit and tied up with some other brands. That time, in 2003, 2004, launching foreign brands in India was something unknown. We didn't know that we'll be able to bring similar standards to India, whether we'll make money on that or not. But over last, close to 20 years, a lot of us have figured out to, launch international brands in India and hopefully make money out of it. And this process of international brand being unknown to today, how to run few international brands well, that whole journey has created a lot of wealth for investors, created careers for professionals, etc. Same opportunity now is available for Bharat, that, launching brands in smaller town, profitability with good standard is more or less unknown. That some people are early mover, but in next 10 years, 15 years, this unknown will become known. And in that process, a lot of organization and a lot of individuals will create a lot of learning and a lot of value. So that's something as a sort of a model that I always work with, and I'm just sharing with the panel and the audience here.
I'll just add one thing. I think talking about the markets beyond the top 7 or 8, right? And us saying that I feel the consumers that, and having now looked at a D2C brand as well, and now what we're doing, in my past life and now, what we're doing, the one thing I realize is the consumer's aspiration from a brand point of view is not very different. When you go from, let's say, a Mumbai to a Raipur, right? They want the same product. I think the question is how you sell to them. And I think the place where we need to kind of get better at is that approach, right? The how behind it. How do we make sure we cater to that consumer, explain it to them in the way they understand? And while they understand, I think we need to learn. And so as an organization, we know how to do a few things more based on the tier one, but I actually feel even selling within a tier one city has various segments, right? I mean, we all know that there are catchments which look very different from each other. We sell different products in those catchments like you were talking about earlier, right? We make sure assortment is aligned better. So I think there's a lot of homework. The answers are sitting there, and hence I think since you asked that question on capability, and I think the one capability which is non-negotiable for all of us today is being data-driven. We are a huge, huge country, and unless we look at data, unless we say that, let me understand these segments better and let me cater to them better, we're not going to be able to reach that, the potential that the brand is capable of, the profitability that we're capable of. And I feel that is a huge unlock, which absolutely is brass tacks, right? This is a non-negotiable thing for all of us.
Over to Vineet about the IFF theme and your capabilities that you're building. And then we'll throw open the house for question and answer. As whatever the time permits, we'll take a couple of questions. Over to Vineet.
So first part on the Bharat part, I said, I'm not saying from today's perspective, but if you look at a little bit longer future, Bharat is something we all need to learn. And that's what intent is, even for you. Maybe your context might change because you're in the luxury space. You might have a different thought process of that market, but it is important for us to make scale. So it's going to be important, and I think I agree that there's a lot to learn in these markets, and that is where the value creation is going to happen. I think the topic was on value creation. I think it depends on company to company, and I think especially who's founded and what is the organization all about. For us, it is profits, it's people, and it's sustainability. These three for us go hand in hand. Many times we've done people and sustainability above profits also. And I think that is core to our organization, and that is how the belief system of the organization is. That's what Bestseller is known for. But I think the large capabilities that we need to build, I think will be three. One is how to train designers on sustainability. I think how to have circular design thinking is a very large capability requirement that we know, because you can't even copy it from somewhere else. Everyone is going through the same curve together. So I think it's a very large capability requirement. If you're focusing on sustainability, and I will say everyone's focus has to be on sustainability because it's going to become a non-negotiable in about 2 to 3 years. This generation is going to ask for it without being ready to pay for it. That also I will say. The second, I think, is how do you enable your employees to be tech savvy? I think technology is the answer. People are not the answer. And I'm not saying that jobs are not important. All that is important. But jobs will be important for value-add things. Non-value-add technology needs to replace it. Today, a large part of your things in your company, mundane works can be done through technology. I think organizations are not ready. The people in the organization are not ready. And that's why it's not happening. So training that across the organization is a very large capability requirement. And then I think Amisha said it, reading through data. I think half the generation does not understand how to read through data. I think it's a capability requirement required in this country. And I think these are three big projects that we are doing for the organization.
You see panelists talking about capabilities from data and technology in one end to Bharat learning, another side. Nirupa was talking how to give a better mix to the consumer so that their experience in the mall becomes better. So there are a lot of technology, and in these 2 days you will get all these stalwarts. You can catch them and how they are doing it and how they've done it. So that's the whole theme of IFF, that how do you decode it and how is the most important point, because what and why is easy. We all understand that data would be important, but how will you build that capability in the organization will be key. So focus on your linkages in these 2 days to pick up how part of whatever you want to sort of exchange ideas on, and I throw it open for question and answer, and whatever time permits, panel is happy to give their views on that. You can ask specific question to specific panelists also.
Hi, this is Rahul here. Amazing panel discussion. And one of the things that has come through as a theme is Bharat is the future and learn Bharat. But Bharat is many Bharats, right? So when Vineet, especially you, when you're kind of trying to train your team on Bharat, there is a Bharat in Kerala, there's multiple Bharats in Tamil Nadu, West, North, South. How are you able to kind of get your team to start thinking all of the Bharat?
I think the answer is tech and data. You cannot train everyone on everything because imagine a buyer is sitting in Bombay where they are not traveling in the markets every day. So I think data and technology can only be the. I think she said about the right categories. Where is that data coming from, right? We will have to introspect our data of what is selling better. What Orion requires in one market might not be in the other market, right? And I think that is where every store will have to be looked at from a category mix, price mix. In a city, itself tastes change, right? So Bharat itself is a very large challenge. And as I said, no one has cracked it. And now that have we. We're trying to figure out ways to figure this out. It's not an easy ask. I meet so many retailers during our trade shows. And I think that is where we'll have to learn because they are much closer to that Bharat that we are. And I think how do we take that learning and ensure that gets part of our planning, our thought process is going to be the game changer. And it's not an easy ask, trust me. But we will have to start somewhere.
Thank you. This was a very good panel discussion. As someone who's formerly from denim, I used to work for Diesel for several years. I think my question is both for specifically from a Levi's and Jack and Jones standpoint and only standpoint, that when you speak of sustainability, in your case, it could actually transform the fabric of your organizations entirely, right? Because denim does happen to be one of the most polluting fabrics. There's been very little real innovation when it comes to production. And I don't think, unfortunately, circular economy is anymore just the answer. So when you do mention that you're forcing design thinking from a sustainability standpoint, are you also looking at really completely changing the way we think of this fabric right from it coming back into its original form? Thank you.
I think it's a great question, and I think it deserves its own time and and I think by no means I'd say that I would say any of us have cracked it. I think we're just starting at the beginning of the journey. I'll just kind of tell you a little bit about how we think about it, right? And when I was talking about our values-based approach, I think this thing is very, very central. And now for Levi's, this is foundation, right? It's a non-negotiable that we're after. We think of sustainability, we think of our job from three lenses. One is climate, second is consumption, and the third is community, right? So I'll come to your point in a second, but I think it's not just about thinking of sustainability from a lens of being waterless, right? It's not about being circular economy, like you said. I think it's about this whole sustainability piece needs to get addressed holistically. So from a climate point of view, for instance, right? I mean, we participate and have those conversations. We sort of, invest ourselves behind it. Second thing is about the community. So when you look at the supply chain, worker well-being, ensuring they have health insurance, ensuring that overall from their working hours, etc. perspective, the supply chain is kind of sustainable, the ecosystem is in a sustainable state. And the third piece obviously comes back to this whole piece around consumption, how much water, right? How are we kind of consuming our natural resources, etc. So it starts with us. To be honest, I think circular economy is one answer. And I think it's a great one to start with. I mean, especially in denims, right? I mean, our campaign around buy better, wear longer, I think it's a beautiful campaign, right? I mean, I think it's phenomenal, and saying that telling the consumers that, it's just, let's share this responsibly, let's do this together, let's do this better, right? While on one hand, we want to say that, look, we all want to grow, we all want to go after growth. But we are conscious of the fact that, let's make sure that we buy better. Let's make sure that we are building products that are enduring, and we want consumers to use them longer as well, right? So I think there is a job to be done holistically, and applying a tag saying that, oh, I use less water, etc., is, to be honest, just the beginning of it. We need to talk a lot more about it. And I think once we start talking a lot more, once you start measuring it, I think actions come about. So we kind of do that. I think we published our report several months back around this particular thing, and we kind of look at these through these three pillars that I spoke of. We published our report, and that's what we're doing. I mean, again, keeping ourselves also very, very honest and open and transparent about it. But we do believe very strongly that it starts with us from a community point of view, right? We need to be the first ones to kind of take ownership.
I think I'd like to add, I think the denim industry needs to do a lot more PR than what it is done. Denim is not as much polluting industry as it was few years down the line. It's changed. The technology has brought that change, right? Amount of water you used to use for washing earlier to now is a world of change. So I think as a denim industry, I think that needs to be really communicated to the consumers of how that journey has begun. And it's the start of the journey. But there are multiple parts to it. Even electricity, how do you consume electricity? Are you using green electricity? Those are many parts to sustainability. Sustainability needs to be broken into, I think, 8 or 10 steps. I'll tell you, you can go through our overall global guide, we've declared something called Fashion Forward. It's got 10 steps of sustainability. So circular is one part of it. It is the toughest part of it. Because collecting and getting it back is a very large ecosystem requirement. And those who are telling are just greenwashing. It's a start, but I think good part is that the start has happened. And I think the speed in which it will change because of the technology transformation is going to be very, very good. I think Levi's is definitely doing a lot more work. We're doing a lot in this part of sustainability, but some part, because we don't do PR for our sustainability agenda, I will not be able to share it, but offline, more than happy to share.
I think sustainability is, first thing I think has come through, and it should be very clear. Don't expect because you're doing something for sustainability, you'll get more money out of it. Stop thinking that. And then I think the next thing is that it's not just about a fabric or for us a leather, which of course needs to be sustainable, but it's not only that. I think every decision gets into it. We measured our electricity, our consumption of energy. Just because our factory, for example, is all solar, and we generate more solar and hand it over to the state of Pondicherry, isn't good enough because the amount of electricity we consume in the malls is massive, for example. So I think sustainability to us has been something that we keep giving without thinking about. We're building a forest, for example. We're building an indigenous forest, which is the largest indigenous coastal forest south of Chennai. So I think it has to become part of your DNA, part of your genes. Everything you think about has to be something to do with it. And just don't expect the customer to give you more money for it. Yes, you can expect them to love you more for it.
I have some information from Calvin Klein brand that we run, but we're running short. We can connect offline on that. Last question. One last question to the panel. Dhruv?
It's not a question, I'm just sharing a perspective, which in my independent capacity, having been in driving retail consumption across so many brands over 30 years, is that we are at a very important cross point in mankind, and I think especially in India's case, where the massive concentration of wealth in the top 1% is so high that we are completely ignoring the balanced 99%. And as young leaders of this country, I think when we look at Bharat, we must drive purpose-led and responsible consumption. You know, in our desire to grow our brands and our clothing businesses, we must not lose sight of our responsibility towards society as well. I think that's something I want to leave the audience with to really reflect on, that I don't think we need to go down the path of Western civilization. There is a lot of opportunity in indigenous crafts, indigenous art, that is just waiting to explode and be, I would say, harnessed and spread around the world. I think that's where is the biggest contribution we can make to our Bharat. Not by selling more denim to a tier 4 city or a tier 5 city or selling dresses. In private conversations, my own brand, we talk about what is the purpose is our brand serving to women in tier 2 towns. Is it making them more confident? Is it making them bolder? Are we creating value in their brand, in their lives? I think that's the question I leave people with, and then we come out with the right product line perhaps, or maybe the right thought process. But it's a very, very important thing that we need to think about, because we are at a very crucial point in the timeline of our country and the world.
Thanks, Dhruv. I want to thank the panelists for participating and giving their ideas. Thank you.